What are the IRA contribution limits for 2024? In this brief episode, we're going to discuss the IRA contribution limits for both 2023 and 2024. Now, why are we talking about 2023? Well, for some folks that are listening, they may still qualify to make a contribution for 2023. So let's go ahead and get started and jump right to the whiteboard. First, it's important to understand that in order to make a contribution to an IRA, you do have to have eligible earned income. So what is earned income? When you hear earned income, you want to think income that you're paying Medicare and Social Security tax or payroll tax on. So what would not qualify is, let's say, all you had was passive income. So income from rents, royalties, interest, Social Security. Those are not sources of earned income. So that type of income is not going to support a contribution to an IRA. Now, let's assume that you qualify for an IRA contribution. How much can you contribute for? We're going to start with 2023, and then we'll move on to 2024. Now, the contribution limit is going to be dependent on your age. So when you are under the age of 50 in 2023, you can contribute up to $6,500. Now, that is for both an IRA, traditional IRA, or a Roth IRA. And keep in mind, we talk oftentimes about a self-directed IRA. Self-directed is just an industry term. So your IRA at your current financial institution is identical to the IRA with equity trust. We call it a self-directed IRA because it indicates to you that you have the ability to self-direct into assets outside of the stock market. So assets like real estate, private equity, gold and silver, cryptocurrency, so on and so forth. All right, so 2023, $6,500 when you're under the age of 50. Now, once you hit 50 and over, there's what's called a $1,000 catch-up provision. And so your total amount is $7,500. That $1,000 catch-up provision has been the same for a number of years. So in 2023, it's $1,000. In 2024, you're going to see it's $1,000. Now, most likely years in the future, under the Secure Act 2.0 that was passed not too long ago, that $1,000 is going to increase. All right, now what about 2024? Well, in 2024, due to the cost of living adjustments, the IRS has indicated that an individual under the age of 50 can now contribute $500 more. So that brings you to $7,000. So for 2024, when you're under the age of 50, you can contribute up to $7,000. When you're 50 and over, that's $8,000. Now let's pause for a moment for some frequently asked questions. So oftentimes I'm asked, John, can I contribute to both a traditional and Roth separately and max out both separately? And the answer is no, you can't, unfortunately. So you got to pick between one of the two or combine between the two accounts. You cannot exceed these contribution limits. Now, the other question I get frequently is about making a contribution for the previous year prior to the tax filing deadline. So in 2024, for 2023 taxes, the tax date, the tax deadline is Tuesday, April 18th, which means if you qualify, you can make your 2023 IRA contribution up until Tuesday, April 18th, which means conceivably you could postmark date a check on April 18th and mail that to your custodian, and that will be deposited, and that deposit can be for 2023. Now, I also get the frequently asked question of, if I file an extension, do I have until that extension date? And for an IRA, the answer is no. You have to have that contribution in on or before the tax filing deadline for that year. All right, another question that I get is, if I'm maxing out my 401k or other workplace plan, can I also max out an IRA? And the answer is yes. Those are two totally separate accounts. So you can max out your employer plan and your IRA. Now, you do have to keep in mind that if you're over a certain income amount, you may not qualify for a tax deduction if you contribute to a traditional IRA. It's called a non-deductible IRA contribution. It doesn't mean that you can't contribute. It just means you might not get a tax deduction for that. And then eventually, when you take that amount out after the age of 59 and a half, you're not paying taxes on that specific amount. We'd encourage you to talk to your CPA or your tax professional regarding these specific items. Also, with respect to income, you'll learn that if you make too much money you're told that you can't contribute to a Roth IRA. These are what are known as modified adjusted gross income limits. And so if you go to the IRS website, irs.gov, you can search MAGI Roth IRA limits, and you'll see those specific limits and what they are specific to your situation, whether you're married, married filing jointly, single, or possibly married filing separately. All right, so you'll see all those specifics. You go to irs.gov. We also have a separate video all on this whole concept of can you contribute or not. And lastly, know that if you are over the income amounts, you can potentially do what's called a backdoor contribution. So you're going to write that down, backdoor contribution. Now, this didn't start until 2010. The law changed in 2010, which allowed all income earners to convert money from a traditional IRA to a Roth IRA. So if you make too much money, what you might have to do is first contribute to a traditional IRA and then immediately convert over to a Roth IRA. I can't tell you how many folks have gone years thinking that they don't qualify to contribute to a Roth IRA. But then they learn about this backdoor contribution approach. All right, so you can check that out on your own time. Let's get back to the contribution limits here for 2023 and 2024. If you think about it, if you meet the qualifications between 23 and 24, if you're under the age of 50, that's a total of $13,500. And then if you're 50 and over, that's going to be a total of $15,500. Now, if you have a spouse, even if they're not working, your earned income, providing that you're married filing jointly, your earned income can support their contribution. It's called a spousal IRA contribution. So if you think about it, between you and a spouse, that's a total of $27,000. If you're 50 and over, both of you are 50 and over, that's a total of $31,000. So what I'm sharing with you here is how in a fairly short period of time, you can get a rather large sum of money into a traditional and or Roth IRA. And then from there, you can leverage what I call compounding interest in the absence of taxation. So think about how these accounts grow tax deferred, and in the case of a Roth IRA, grow completely tax-free. Now, let me give you a quick example of how this works. I'm going to give you a compounding interest time value money example. And let's say with a Roth IRA. So let's say you're under the age of 50 and you make your 2023 and your 2024 contribution, which is $13,500. And we're just going to apply an 8% return on investment. We're going to apply that. We're going to contribute on an annual basis $6,500. And we're going to do this over a 30-year period. And we're going to contrast this to what if you were paying taxes every year? So what if you didn't put the money away in an IRA? So if we do that compare and contrast, we're going to factor in a 25% marginal tax rate. And so if we plug our numbers in here and we look at over a 30-year period in a non-IRA environment, so we like to call that a taxable environment, meaning every year as we make an 8% return, we have to pay taxes on that return. So over the course of 30 years, we will have let's call it $587,000. All right, there's the exact amount there. And if we do this in a Roth IRA, our 8% return that we make every year, that's going to compound year over year, and we're not paying taxes on that compounding amount. And so each year we have more investing power. We've received more return on the previous year's principal. And so when we add up those numbers and we calculate that, we get a total of $862,000. So if we look at the difference between our initial amount of $587,026 on our non-IRA environment compared to our Roth IRA environment, that's a $275,000 difference. So in other words, we save $275,000 in taxes. So that's the impact of what we call compounding interest in the absence of taxation. I hope you enjoyed this short video on IRA contribution limits for 2024. We talked about the 2023 contributions. So make sure that you talk to your CPA or your tax professional as you navigate these waters. And until the next video, keep leveraging compounding interest in the absence of taxation.